Hello, welcome back everyone. In this video we are going to discuss about the Nifty 50 time cycle and its calculations based on numbers and so many methods. I'm going to reveal few secrets here which will help you to forecast and understand the relationship between time and the numbers. There are so many ideas and calculations out there. I'm going to reveal a few here. I have been researching this for more than 2 to 3 years. So here are the few things which I have mentioned: ratios and proportions, Pythagoras theorem, geometry and numbers, how it connects all, and finally the Fibonacci. In this which I'm about to show you, some will give you exact accuracy, exact high or exact low of the future market. Some it has an error of, let's say, like 1 or 2 days. For example, the date is January 20, the pivot date, and you can consider January 19th, one day before or one day after 20th. So within these 3 days the calculation it has to work. If not, you will have to recheck it and work it in some other way. Once the video progresses, you will understand how to do this. If January 20 is weekend, you can take either Friday or Monday date, all of which I'm going to show you. It's all calendar days only, it's not trading days, so be careful in this actually. So basically two methods I'm going to reveal here based on ratio and proportions. It involves of divisions and some squaring and etc. indirectly, and using Fibonacci. While using these two, this Pythagoras and geometry and numbers, it's all taken into account automatically actually. That's the beauty of it. It's all geometry and numbers. In this you can see the numerology is anchored mainly in 6th dimension, the highest tangible dimension, where astrology operates mainly from the 4th dimension. So once you master geometry and numbers, it will all make sense to you. You can check the image here. It's all basically geometry. Circles, squares, triangles, it's all in spirals. You can see it's all spiraling inside. It's all wheels inside the wheels, circle inside the circles, triangle inside the triangle, squares inside the squares. Next image, it's all the same. You can see the triangle inside the triangle here. It's called as Pyra Mirabilis. You can see the Fibonacci here, same Fibonacci, triangles, circles, etc. Same here. See the Fibonacci, circle, triangles. See a pentagon here inside a circle. So it's all basically geometry. Let's move on to the charts. This is Nifty 50 index in daily. You can see here, this is a daily chart. Simply I have taken this high to low, every swing high and low I have marked trading day bars. This is calendar days actually, from this low to high. So basically I have done that to every high and low to show you how the time works actually. So only if you mark, you will be able to understand and relate it easily actually. Okay, first the ratio and proportions. How I'm going to use it is, you can see this high here, from this high to this high, it's actually 279 days, calendar days. What I'm going to show you in this video, it's all about calendar days only, so ignore this bars and etc. It works, but you will have to test it actually. Some instruments it vibrate good with trading bars, some it is actually good with calendar days. So out of 10 instruments, 8 instruments or 7 instrument, it works good with the calendar days actually. So in this Nifty calendar days, it works perfectly and very beautifully. So you can see that high to high is 279 days and from here this high to this high, from where the crash started, it is actually 231 days. So using this two thing, I'm going to forecast the future markets. So let's see how this plays out. So now I'm going to take this 279 here and 231. Let's say 279 divided by 231 is equal to 1.2077 number, and you'll have to multiply that by 279 again, and it will give you 336 or 337. Let's start from here. 336 days, 337 days. You can see the market, it has formed a low here exactly in that date actually. So I'm going to keep doing this in many places. I know the reason why I am starting at a certain point, why I am ending at a certain point. That I will not reveal, you will have to work it out. Almost every low and high of these indices, using that you can able to forecast the future price. This price, this price, this, and so many are there. You will have to test it out. I have taken the recent markets to show you that the calculations, it's actually working in the current market and current trend. Next, I'm going to take this 150 days and 64 days. It took 64 days to drop from this high to this low, and 150 days to actually go from this low to this high. So 150 divided by 64 equals 2.34375, and multiplied by 150, you will get 351.5625. 351 or 352 days. It's almost. So let's check this from here. Starting point through 352 days actually. 351, 352 days. It is an important high. From there the market actually retraced, and from there it again went up. So this has given a nice stopping date based on these two calculations. 150 days and 64, which will give us this high actually. Next we are going to take from this low to this high. It's actually 160 days, and this low to this low, which is actually 129 days. So 160 divided by 129, that is equal to into 160 will give you 198, almost 198 days or 199 days. So I'm going to start from here. $198, $199. This is actually coincides with this cycle actually. It ends here. After that, after 1 or 2 days, with a difference of 2 or 3 days, we see another cycle ending here. So we can expect a range or retracement, and be careful here, and we know much in advance that time is up and something is about to happen here. Not only that, when you take from this low, this is where we have taken actually this low to this high, this low to this low. So from this low, if you take 198 or 99 days, yes, actually it's a weekend, so this should be appropriate. 197. So we can see a high price in that region, and after a few days there was a low here actually. So it all comes together to say that the time is actually up. One, we saw this 351 day here. Previously when we start from here, it gave us 199, 198 days. When you start from here, it gave us some other time which is of close among each other, and we shall move on to the next. Next we are going to take this low to this low. Actually it's 184 days. We are going to take 160 days here from this low to this high. So we are going to do 184 divided by 160. Let's go 1.54 into 184. That will give you 211.6. So we are going to start from this price. We are going to mark 211 days. 210, 211. That's exact bottom where the price actually went up. So we have got nice time at this place. We can expect nice. I can use a price action and some other calculations. You can see here I have used price calculation which I have forecasted in my other video. When the time and the price when it works together, we can see a nice retracement. Actually we saw that 15 to 29 is actually a good price. The time is also up. You can short because it has reached the price on the time. Here we saw few minutes back. Not only that, in future you will see nice relation between this high and the all-time highs as well. So it's all related. Once you connect all, once you know where to look, it will be all easier and it will all make sense. Actually we just saw how 184 days and 160 is related to 211 days here at this bottom. Almost from there the price pushed up. Next we are going to see how 123 days and 37 days. So initially the initial move, it can give you the perfect calculations of the high date actually, if you know how to look properly. So this is low to high, from high to high. So low to high is actually this high here, 37 days. From this high to this high is actually 123 days. Here we saw that the confluence of time cycles, how it works, and with that help we can relate much easily. So same way here you can see 123 days actually divided by 37 is equal to 3.3243 etc. multiplied by 1, 2, 3, that gives 408 or 409 days actually, to be precise. Actually it is from here. Okay, yes, 408 or 409 days. So you can see the perfect calculation is pointing towards October 14th, but it is off by 2 days I think. See the all-time highs. The all-time high is on actually October 19th. Okay, but this calculation is actually around 408 or 409 days. October 14th was the date. So we know that something is about to happen in this place on time. Okay, now this is going to amaze you actually how the cycles and calculations it works. Now I'm going to show you something. Let's take this actually from this low, major low, to this high is 303 days. You can see here I already marked here. So this is 160. So from this low to this high is 160. From this low to this high, it is a very important high because the price 14738, it is also there. And so we are going to do this now. Let's see how this works out. 303 divided by 160 equals 1.89375 times 303 is equal to 573. It's actually 573 or 574 days to be exact. You are not going to believe your eyes right now. Let's say I'm going to start from this low, 574 days exact. So the simple calculation, you can see that it's wonderful and amazing how I found the all-time highs. Even before the all-time high formation, the price cycles, actually there is a price cycle here, I didn't mark. It's around 18350 actually. I'm going to mark it randomly. So once the price touches and the time is up, we know that something is about to happen. When the next calculation, you can see that perfect all-time high time actually. So this is how this calculation works. It's more perfect. I have tested in gold, silver, Nifty50. Right now we are saying it, Nasdaq, Dow Jones, and so many instruments. It works well, but the individual vibration and its harmonics, it differs as per the instrument, and you'll have to work it out why it is happening, from where you have to start. There is a geometrical reason, the ratio proportion, there is a multiplication, there is indirect squaring in it actually. There is triangles involved, Pythagoras theorem involved. So it's how it's all connected actually. It's all basically numbers. So these relationships keeps occurring again and again. So many repetitions, and you can see here from this low to this high is actually 145 days. If you take from this low to this low is actually 210 days. You can see here from this low to this low is 210 days here. So what I'm going to do is 210 divided by 145 into 210 is equal to 304.137. It's almost 304 or 305 calendar days. So I'm going to start from here. So I'm going to see 304. Next it moves to 307. It's a weekend, so we can take that price. Actually 305 days. So it's a perfect low there in the recent times. So the relationship just keep occurring again and again. Circles, it's all like circles inside circles, wheels inside the wheels, triangle inside the triangles. It's all the same actually. So if you know how to move forward and understand the relationship, you can forecast the future prices actually very easily. And if you know the price as well, you can easily connect, and you can be very careful with it, and you know very much in advance actually. There are many more calculations. I will leave that to work it out in this ratio and proportions and divisions and its squares and etc. Next thing which I'm going to show is a very important. It's actually Fibonacci number. You can use so many numbers actually, not only Fibonacci, roots of numbers, squares of numbers, 3 times of squares, etc. Next it will be a Fibonacci number. Let's take 160 days. It's right here. I'm going to multiply that into 2.618. That will give you 418 or 419 days. From here 418, 19 days. It's almost here in this low. It's pointing towards this low actually. From there the price actually pushed up. It's an important low here. And next we will see about 303 days. Let's take 303 days into 1.618. That will give you 490 or 491 days. From here, it's actually 491 days exact. This is the low formation. From there the price went up, so it's actually 491 days to be exact, and you can see the price. From there it pushes up. Again, if you multiply 491 days into 1.272, it will give 623 or 624 days. From below, 623, 24 days, almost here. You can see the price here. There the price holds and it reacts. There is a low here actually. I think these are all minor cycles. This one we saw that 210 divided by 145, it's almost exact low here. These are all major ones. When you take the right low and the right high, you will get that end point very perfectly. But most of the time these calculations, it differs and it works on most of the highs and lows actually. If you understand the concept behind it, the cycle is very easy for you. Few minutes back we saw how this low is related with an example here. So again, I'm going to take this low to this high. It's actually 329 days. Yes, it is. So 329 days into 1.272, that's equal 418 or 419 days. So it's a double confirmation here. 418 or 19 days. Yes, it's perfectly 419 days at this place, this candle exactly. This is where the previous cycle also ended exactly. So that's why numbers are very much important. It will give you perfect time and accuracy. Now I'm going to take 184 days. 184 into 1.618 is equal to 297.7 days. From this low, I'm going to mark 297, 98 is actually 297. Yes, perfectly it coincides the drop area along with the price, so we can be more careful at this time. Again, we are going to multiply with 1.618. Let's see what happens. 481 to 482. 481, where is it? Yes, it's showing us this low almost 482, 481, 482 days actually. Previously, one more calculation, it pointed to this low. So both the time it coincides, so we should be very careful and wait for the confirmation. Once the time is up, we saw that there is a pin bar and stop on here. After that, the price pushed up. This is not about price, but this is about time, so we should be careful about here. Okay, I have taken this 145 days. So 145 into 1.618 is equal to 234.61. So I'm going to start from here. 234 or 235 days. 234. That's hilarious because we are getting triple confirmation at the same time actually. See how the calculation, it's all pointing to exact perfect single day, which means we will have some huge impact when the Fibonacci and the ratio and proportions are all together. When it all comes together and we see a confluence at a single date, there will be of massive movements and volatility. There will be a reversal and you can trade based on the confirmation. So we saw so many times, almost this is the third time perfectly it's matching around the 17th May, I think. Yes, 17th May it is. And there we saw a price breaking up, and from there it went on to reach the all-time highs actually. So in recent times, I'm going to take this high and this low. It's actually 62 days. So 62 into 1.618 is equal to 100 or 101 days. You can see here. It's almost 100 days, okay? So you can see that there is a major low on this particular time. I hope you got an idea about this. I can keep going on and on and on. Actually, there are so many numbers and so many ideas behind this. I'm certain that you have got some nice idea after watching this video. If it is not clear, rewatch it as many times as possible. You can do this for the past highs and lows in Nifty and check it. I have checked it, it works perfectly. You will have to connect the correct high and low, or low and high, or high and high, or low and low, etc. So it's all connected somehow. You can use the numbers and it will show very clearly how it's all connected. It's basically wheels within wheels, circles within circles, triangles within triangles, squares within squares actually. This is the perfect proof how geometry and numbers, numerology, Fibonacci, it's all working together. When we use ratios, we get perfect and exact high actually, exact lows actually. We'll get so many, this low we have got, and it's all perfectly connected. So work it out. If you have any doubts, you can reach me at this channel, Price Action Expert in Telegram. You can check my channel here for the past analysis and regular updates and forecasts. Price Action Expert, you can contact me in this ID. I certainly believe that this video will be of more helpful for you. So do like, share, comment and subscribe to your friends. So take care.